What if you run across a property that hasn't sold for 3 years? Should you take that on? Hey, welcome to another Deal Structure Sunday. It's Chris Prefontaine with smartrealestatecoach.com. And I am with, again, Link Urban from North Carolina, High Six Associate and Certified Coach. Link, you're becoming a regular now. Welcome back.
Thank you. Thank you. Good to be here.
So this is going to be a cool one because, as I said to you before we started filming, even some associates, never mind students that we don't know yet, think, oh, if it was on the market for a long time, I shouldn't take it on. That's too risky. So let's dive in. Let's go through the basics first, and then we'll deviate. So what's the source?
The source on this was actually a postcard. I send postcards, and this happened to be one of my postcards. It had been a FSBO. It was a year-old FSBO postcard, is what it was.
FSBO postcard. Okay, and I might throw this in there because I was just talking to a guy last night. This is like current, who's applied to be an associate last night in Florida, and he may be listening to this episode. And he said, I won't tell you the companies because there's nothing wrong with the company. It's a really good company, but he's doing mailings to this company, and he's spending $5,000 a month. That's actually on the low side for some wholesales, but that's what he's spending per month. And I just want to point out that we just don't do that. How many do you send a month, for example?
I send 300 a month postcards, and I spend, but I do them myself, in the evenings when I have free time. But I spend roughly, I don't know, $150 a month, maybe.
Yeah. Crazy good. So I just want to make sure we told the audience that because we do not need to do that. All right. So we got a FSBO after a year, but it was on the market for 3 years. Tell me about that, Link.
Yeah, it was on the market for 3 years. It was also on the market. He's military and got relocated. It was her hometown. It's where her parents lived. So they bought a house, and then he got relocated, and it's been on the market off and on for 3 years. They've had 2 different renters in there who were going to buy it. The only problem was they didn't have a plan. And they've had to have 2 different attorneys evict 2 different tenants, and then they had to spend money on repairs. So it was interesting. It was interesting when I first took the property. For the first month, about once a week, she'd call and tell me, well, don't rent it to so-and-so. Well, listen, I don't rent it to anybody, and I can assure you, I don't have those problems. We don't do that.
She rightfully so was a little gun shy.
Oh yeah, she was very gun shy.
So a couple things I wrote down. One is cool comment you made, renters, we don't rent it. So we rent to sellers all the time. This is a case in point. I bet you when I'm on the phone, especially if I'm doing for rent by owners, it's weekly where they say, I already tried that. Okay, you did. How much deposit did you get? Well, I didn't. Oh, did you pre-qualify them and send them through the screening to make sure they're going to be mortgage ready? No, I didn't do that either. Okay, so you had a renter that had a dream someday maybe to buy.
Right.
That's
with
all.
With no plan whatsoever.
Yeah. And then the other thing I heard you say is she had how many evictions? 2?
2 evictions.
So
2 separate attorneys.
Done with that. She was like,
yep.
Okay. All right. So let's keep going. Then this was, you tied this up as what type of deal? Did you know going in?
I didn't know exactly going in, but I knew there was a mortgage, and I knew that they were kind of pressed for time. So I ended up doing a 36-month sandwich, which I know is a little bit short, but if you manage it right, you're fine on that.
Yeah, and let me just say this for the audience too, for the Wicked Smart viewers. A 36-month, and I don't want to scare you, but a 36-month, if you're dealing with someone that has their primary residence, this one wasn't, but if you're dealing with someone with a primary residence, please understand that morally and ethically, you should look to see if they're going to be whacked on capital gains, and they will be if you go past 3 years, if it's their primary residence, because they have to be in it 2 out of 5 years. So that's just a heads up to you to be careful, because you might not do that because you're not required to. You expect the homeowner to know what they should be doing. But if you don't tell them and their accountant didn't tell them, guess who they're going to be pissed at in about 3.5 years?
Right.
You.
Right.
So, all right, good deal. So 36-month sandwich.
The one who knows what they're doing.
Yeah. 36-month sandwich. Let's go over the numbers then, Link. How much was it on the market for? Like, do you know any history with that?
Yeah, she had started it at 340 and had worked it down to 285. That's where she was at, was 285.
340 down to 285. So you got it at 285?
I didn't.
I
got
actually
it.
don't remember. I sincerely don't
I,
remember.
I got it at 300. That was
Okay.
my negotiation to get her to agree to do it.
Well, that's not even, you could have paid 360 just to get everybody thinking. What was the underlying debt?
Underlying debt is 248.
248. And do you know how much principal pay down is in there? I'm just curious. We'll go to the paydays later.
555 a month.
That's really cool.
Yeah.
Okay. That's over $6,000 a year. 300. Yep. Okay. So I just want to say this, Link, again, you and I know, but I assume too much when I do these. So Link didn't say to her, I'll pay you 300,000 for the house. Link said, we're using 300 as a base. Tell me if I'm wrong, Link, but you owe 248. So therefore you're going to get cash of 52,000 out.
I used 50, but yeah, you're right.
Yeah. Okay. So 50. So we focus their brain on the cash they're getting out and, hey, we'll pay off your mortgage because your mortgage will be less by then.
As soon as I get that baseline, I never talk about anything else. As soon as we set the baseline, that's all we talk about.
Yep, it's awesome. And that helps your conversation at the beginning, right? Especially with someone that's been on the market forever. Hey, what did you think you were going to get?
Right.
Oh, I wasn't going to get more than 300. Originally, I thought I was going to get a lot more, but I get that now, the whole logic.
Well, the other thing that it helps is, and it's been something I've been, I guess, fortunate, but I mean, when they see the agreement and the agreement doesn't have the price, they panic. And so I set the tone early of what to expect when they get that agreement. And I never have problems with agreements. We have people who have issues, but I never have problems with them.
All right, so that's a high point. It's a plus for you, though. I want these guys to know that as a coach, because you're telling your students with Smart Coach to do the same thing, and that is Link communicates super well up front, so there's no misunderstandings, and the sellers walk away happy. That's just common sense, but too many people don't do it.
Well, there are two components of that. One is the price, and the other is the principal pay down. And I'm just clear from pretty much the end of the first conversation or the beginning of the second conversation that just like when you're making the payments, you get the principal pay down. When we take over, we get the principal pay down. So those two things don't ever come back up, and they don't ever become an issue a month from now when I've invested hours with these people. And, oh, well, wait a minute, we thought we were getting principal pay down. So it's really important to announce that up front.
Yeah. Communication, always. All right, so let's do the paydays. Well, no, actually, how fast did you sell it? Because she was on for 3 years.
I actually had a buyer who committed in about 45 days, but I kept it on the market because they had a house for sale, and they needed the house to sell so that they would have the down payment. So that's really it. It
so you had
ended up being about 70 days, but I mean, I had a commitment of 45.
Yeah, and then you probably good problem to have, but had maybe some interest in the background just kind of brewing.
No, I did. I had a lady who was waiting patiently for me to see if they were going to buy or not. The problem was she had a smaller down payment and was probably only going to be on for a very short period of time. Didn't like the price. I mean, but I had a backup plan.
Yeah, a week backup.
Yeah.
All right, let's do paydays. Payday 1, overtime or upfront.
I set it at 36,000, and I ended up getting 18,000 upfront. So I got 5% upfront.
Cool.
And this guy he's opened a couple of new businesses. He's got plenty of money, and I used an incentive. I think I'll get the rest of the down payment by June the 1st. We scheduled it out further, but I believe it'll be here by June the 1st.
Okay, well, this is going to air on Deal Structure Sunday soon, but just so everybody knows, we're talking here, Link and I, mid-Feb, 3/4 of the way through Feb, so that's great.
Yeah.
And what'd you sell it for, Link? So did you sell for 360?
359, yep.
359, tied it up for 3. That's really cool. So let's go through the numbers more then. Payday 2 spread, your mortgage payments, how much?
I don't have any spread. I sold it for what I bought it for.
On the monthly?
Yep.
Okay, which is how much?
2,000.
Yeah, it's kind of pushing the envelope, right?
Yeah.
Okay. All right, cool for them to know that, because so you'll see why Link stayed in it in a minute. Payday 3, which includes the markup of 59,000 minus the deposit plus the principal pay down, comes to what?
43,000.
Yep, a ballpark. Yeah, 42K. So 42K and 36K is our profit because we don't have any payday 2, correct?
That's correct.
All right, so boohoo, it's 78 grand.
Yeah. For a house that she couldn't sell for 3 years, had 2 attorneys, 2 evictions, repairs, renovations, and it took me really 45 days. If he had didn't have the house, it would have been a 45-day deal compared to her 3 years on the market.
Yeah, and you know what we don't talk about often enough? We do amongst our community, definitely in the masterminds and whatnot, but we don't on this, and that is think about a wholesaler or a rehabber calling her. They couldn't do what she wants to do without lowballing her, insulting her. That forget our paydays are way better. They just couldn't do the deal. And then secondly, think of how positive we're affecting her in probably what we always call generational effect, family effect. Like you helped this family out big time.
Yep,
Really cool.
absolutely. And another family.
Yeah, coming in.
Yep.
So we don't say that enough, and all, especially the high six, but I think all of the Wicked Smart community, the associates, when you interview them on Facebook Live or on these interviews or even in a mastermind, they all say in some shape, form, or fashion, they're all in this because it's so positive. They can help people.
Yep. Well, everybody wins. I mean, it's truly a win-win-win scenario.
I love it. I love it. I also love that you and I got up at crack of butt to do this at 7 a.m. So I appreciate that, Link. Any other nuances or anything that I didn't ask, Link, that you think I left on the table here? Because this is a cool deal.
No, I really don't. I mean, the fact that it was it's an outlying area of a metropolitan area, so it's really where I look to buy houses. I mean, it's perfect credit, great down payment. They can buy in any neighborhood, but I'm looking a little bit further out, and that's where people they're happy to drive a little further into the metropolitan area to have a nice house.
It's awesome. And this was deal. I want to put this in perspective for these guys. Two numbers I'm going to ask you for on your front. You were at our presentation with us in Philly, so you know that I use averages of 75 grand per deal for us. What's your average right now? And this is like your 12th deal. So what's your average right now?
It's right on that. It's right on 70.
Like close to us.
Yeah. Right on that.
All right. So I don't know what 12 times 78 is, but I can render a rough
estimate. $1 million.
Almost $1 million. Okay.
Yeah.
So I wanted them to hear that loud and clear. 12-ish deals, $1 million, all 3 paydays. So he's got money up front, some of that. He's got money coming over time. He's got money charted on a Excel sheet. So he knows exactly when it's coming. So could he take 6 months off or 3 months off or 2 months? Sure. He can chart his income out and know when he can do that. So that's pretty cool. Congrats, my man.
Yeah. Thank you very much.
All right. Well, that wraps up another Deal Structure Sunday, guys. Make sure you subscribe to the show because these, as you can tell, are all 100% different. Like there may be some crossover in concepts, but none of these deals are the same. The sources aren't the same. The structure's not the same. And make sure you get your butt registered for the Business Scaling Secrets event where we're going to rip apart deals for probably 6 or 8 or 10 hours over 2 days, just deals. And then the course, the Quantum Leap, the QLS Live event every September. Get registered, QLSlive.com, biz, B-I-Z, scaling.com. Thanks again, Link. Have a great day, buddy.
Thank you, man.